Welcome to RANsquawk's e-morning briefing for Friday, the 27th of November 2009. Just taking a quick recap on the markets and where we trade at the moment in this morning session. Also a bit of a review for any US listeners who may be tuning in early. Hope you had a good Thanksgiving holiday. But one thing you'll be catching up on will be that main story that broke on Wednesday has continued to garner further traction throughout the financial press yesterday, and hitting most national papers' front page story today is that of Dubai and possible credit defaults. Just recapping some of the story and what we saw yesterday: hefty falls across the equity markets in Europe, likes of the FTSE, CAC and DAX all falling around 3% for the session. The dollar index, that gained on risk-averse trade. In turn, particularly financials led the move lower as many market players fretted over the fears on potential bank exposure to Dubai itself. Also very much fueling more risk-averse trade was that in terms of potential risk in the widening of CDS spreads for the Greek economy, especially against the benchmark German 10-year Bund, especially Portugal and Ireland spreads also widening on fears of potential knock-on effects there. Looking at what we traded overnight, Asia, they followed suit then from the downtick yesterday, and as that story broke as well, Nikkei fell today 3.2%, which marks a 4-month low, predominantly led by those financials. And that led to pretty much continued risk-averse trade at the European Open, where equities opened sharply lower, around 2%. Also, the greenback continued to gain pace. We're up around 1% of the session high early trade, around 8 o'clock in London. That in turn did weigh particularly on commodity prices. Spot gold was down around $50, and also WTI crude futures fell as much as near $5 in early trade. However, as we've seen various corporate names come out and pretty much look to distance themselves, especially in Europe, we've had the likes of SocGen, Dexia, UBS, Swiss Re, just to name a few, who said they have minimal exposure in terms of Dubai. We have seen the financials make quite a steep turnaround since the lower opening, going from the worst sector to the best sector performance. That in turn has lifted stock futures back to around the near unchanged mark, as financials are now the outperforming sector. One of the things to bear in mind though is of course the Thanksgiving holiday yesterday in the US, and US market participants will be returning to the market for the first time. So even on a reduced schedule, we could see somewhat of a second reaction to some of this story. So in another 2 hours or so, when we hit around 7:30 in New York, I'll be keeping a close eye on how the various asset classes react. In terms of the actual calendar for today, it is extremely light in terms of US corporate data and economic releases. We'll only be looking out for a Canadian current account that'll be due at 1:30. But again, early closures in the US and the Dubai story that will continue to garner interest there. I'll be keeping a close eye on whether equities can indeed hold on to these gains. So far we've seen pair back in the European morning.